What I'd like to share with you is just a few thoughts on Islamic banking and the development of Islamic financial markets. And I'll start by giving you perhaps just a background about the current situation and where we are, and hopefully try to relate this to the non-Islamic financial world that we live in, and relate that to some crises that we have seen recently, and hoping to learn some lessons about how we can improve going forward. First, just to indicate that the lack of a central religious authority in the central religious authority in Islam in terms of finance has been a source of confusion, and I think this has slowed to some extent the progress of the development of Islamic financial markets and institutions. So what happened as a result is that Islamic banks have formed their own religious boards who would act as advisors before introducing any new instrument to the market. And sometimes the differences in the interpretation of what is a haram and what is halal in terms of these financial instruments have led to a situation where the same instrument may be perceived as okay by some and not okay by others. So against this background, you have the current financial markets that are not structured easily to adopt really Islamic financial institutions. And so there's a lot of challenges that these Islamic financial institutions have to overcome, and that's why I think in the slide that Dr. Abdurrahman showed you earlier, some of them had been able to leave the market and not being able to survive. And obviously the ones that have strong procedures and resources have been able to survive. So on the regulatory side, you have the existing banking regulations in most Islamic countries that are based on a Western model. And that Western model, as you know, includes a lot of interest and things that are not acceptable in Islam. And on the accounting side, there's issues about transparency and surveillance. Any kind of Islamic financial system obviously needs to have some strong accounting procedures and standards. It's important that you obviously intend to do good, but it is also important to realize that sometimes you can also cause harm, financial harm to others, even though your intentions are good. So it is important to have well-defined procedures and standards. In Islam there's no SEC, there's no FDIC, and so the Islamic banks have had really a double duty to first police themselves to make sure that they abide by Islamic principles, and at the same time also obey the laws of the land in which they operate. And so there's a double challenge here to overcome these difficulties. At the same time, one of the important rules of Islam, the inability sometimes to not sell short certain instruments, have forced Islamic banks to maintain a lot more liquidity than others. So if you look at the typical Islamic banks, they tend to have 40% more liquidity than their counterparts. And I think this is an important characteristic which needs to be stressed. And then obviously the Islamic institutions operating in non-Islamic countries, they have this duty to operate according to Islamic principles while obeying the laws of the land. Let me turn to the Western model for a second and just point out some important financial fiascos, crises that have happened over time, starting with the savings and loan crisis back in 1989. This was obviously the biggest crisis that this country had witnessed, to the tune of $240 billion. Just to give you an idea of how significant this was, this is approximately, if you assume there's about 100 million taxpayers in this country, this is about $2,400 of your tax dollars and mine that have gone directly to subsidize this important crisis. And so, this raises an important aspect about what is going on and how we can improve that system in which we operate. There's also a lot of other fiascos along the way. I've just had a short list here. There's obviously a lot more. I mean, obviously you here Orange County stands to your mind. There's also Nomura, there's Allied Irish Bank. There's a whole host of companies that have really suffered as a result of a lack of transparency and accounting rules. Lately, obviously, is the Enron fiasco, and I'd like to briefly talk a little bit about that and see how we can relate it to the Islamic perspective. Last October, Enron is a big energy company. I think it was the number 10 public company, number 12 public company in the world. That has surprised the market by suddenly announcing that it lost about $1 billion as a result of some partnerships that were controlled by the chief financial officer of that organization. And so all of a sudden this organization, this corporation, had to take about $1 billion in losses as a result of these accounting irregularities. Following this event, there was a class action lawsuit by the stockholders which actually owned the shares of Enron, alleging that Enron management had misrepresented the financial condition of this organization by trying to hide losses through these suspicious partnerships. And so what followed after that is a big, soap opera, a financial soap opera, if you wish. There was a bankruptcy. There was a suicide of a suspicious suicide of a senior Enron executive in his Mercedes in Houston. There was allegations of cronism and denials, and obviously this whole incident had reached all the way to the White House. So evidently this Enron fiasco is a prominent case of what we call in finance corporate governance, or the failure of corporate governance. Let me just touch briefly on what corporate governance means and why it is important to recognize. Corporate governance is simply the nuts and bolts of corporations trying to fulfill their responsibility and duty before their shareholders and the stakeholders. And there are three main components of corporate governance. One is to have transparency. Second is to have accountability. And last is to have disclosure of your activities. And we see that in Enron, disclosure was an important item that was missing, as well as transparency. When we try to relate that to Islam, we find, for example, that the concept of corporate governance, which was put forward in the West as a result of obviously a lot of financial crises and bankruptcies that have hurt many stakeholders, we find in Islam that there's something actually very similar to it in the Quran. For example, the second surah in the Quran, Surah Al-Baqarah, talks specifically about the steps that two parties need to follow when they are transacting. And if you read the surah, the ayahs, the two ayahs very carefully, they detail the steps that you have to follow. And what is emphasized in these two ayahs is really the bookkeeping. Is really the importance of bookkeeping, and the Quran goes into a lot of detail of what happens when one bookkeeper may not be available and so on, and obviously this is very important. So the message behind these two ayah is the need to have transparency and the disclosure of the business dealings when you are transacting. And these are obviously the important principles of corporate governance today. Another important ingredient of corporate governance is accountability. And so when we look to the Prophet Muhammad ﷺ, how he suggests to deal with the issue of accountability. He says he has a very important hadith in that regards. And so if you translate this tradition into modern business dealings, you have to be accountable for the actions that you perform. Just recently, as you know, the Justice Department also had indicted actually Arthur Andersen for criminal misconduct in relation to what happened with Enron. Arthur Andersen is the accounting firm, the auditing firm of Enron. And what was interesting in the indictment of the Justice Department is that they indicted the institution, not the individuals that actually did the misconduct in that institution. And so here, one has to ask questions about, why should individuals that were not part of Enron, had not really heard about Enron, but actually worked for this accounting firm, all of a sudden have to be responsible for the action of that institution. So, this idea of a collective damage on the corporation is something that also needs to be looked upon from an Islamic perspective. Let me turn to some other civilizations, non-Islamic civilization, and see how they look at corporate governance from their perspective. If you recall, back in the early 90s, there was a big financial crisis that inflicted a lot of harm on the Southeast Asian economies, Malaysia, Korea, Thailand, Hong Kong. And one of the important problems that mutual fund managers and financial and banks in this country have tried to relate to these countries is that you don't have good standards, that you don't have transparency. And so the focus really was shifting not on perhaps problems that exist in the way these economies are operating, problems like exchange rates or capital flows and what have you, but really they thought that the problem was corporate governance. You look at, for example, Japan, and you find that Japan does not have a Federal Deposit Insurance Corporation. And so when a bank fails, what happens is that all the other banks try to form together a partnership to save that bank that had just failed. So they take full responsibility of that bank that had just failed. So laws obviously are very important, and but there has to be, in addition to these laws, there has to be some ethical platform to parallel these laws. Otherwise, these laws may not be; they would remain on the books, and no one really practices them. So it is important to identify and have clear guidelines to institutions and identify the roles and responsibilities of the institutions in that corporation. So you have to have a comprehensive code together with some good legislation to balance the acts of the individuals in that corporation and have good disclosure, not just by senior management, but also by all the way down to the individual bookkeepers. Without providing the safeguards, investors are simply not going to be placing funds in institutions that may not have good transparency. And so from the perspective of Islam, obviously deeds are more important than words. Otherwise they simply remain words can have an empty meaning sometime. Corporate governance should be practiced in the form of deeds and actions and throughout the organization, and should not be limited to senior management, but should always trickle down to the bookkeepers by providing the safeguards, for example, for the whistleblowers that would tell you about a problem that could perhaps lead to a major investigation like what happened with Enron.